Good morning. Good morning. I'm Charles Coachman, and this is Coachman on Real Estate. I hope that you have had a great day yesterday and having a good one so far today. I had to skip yesterday's broadcast because we had our cable down. Had our cable down for a good portion of the morning, but it is supposed to lead us to a stronger cable. And hopefully we will not have any problems with getting stuck or our TV being shut down and frozen. Just like we've been frozen here a few times. So with that being said, thank you for being here today. We appreciate it. Hey, I like to start my show out with just giving some shout outs, and I've got a couple today. So happy birthday to Jennifer Merritt Moran. Jennifer is just an awesome woman that is doing great things in this world. She has done an awful lot of things. She is a pretty decent person and just great woman. And you can follow her on Facebook. Take a look for her, and you'll see some of the things that she's done. She's got a wonderful story. As a matter of fact, she was just on one of my friend's shows yesterday named Kellen Ann. And you can probably find Kellen Ann's show on Cards That Wow. And Jennifer was her guest yesterday afternoon. And what a great show and what a great story about Jennifer yesterday. So Jennifer, happy birthday. This next fellow, John Knox Helveston, he has played a big role in my life, and I am forever grateful for him. He has done an awful lot for my family and for myself, and has done a lot for people all over the world. So, as I would call him, Pastor John, have a wonderful birthday. We appreciate you, we love you, and we thank you for the changes that you helped me to make in my life. And so happy birthday to you both. If it's your birthday and you're not here, that means we're probably not friends on Facebook, or you're just a little bit too shy to share your birthday. But if it's your birthday out there, happy birthday to you. Enjoy it. So today's topic, and this is all about real estate. We want to stay on topic. One of the things that I talked about on Monday or on Tuesday was think. And that is team, help, information, neighborhood, and keys to a good transaction. What are the keys? Not just the physical keys that you get to open your door with, but keys to making a transaction work. And I just want people to understand that we go through a lot in a transaction. So today, this show is going to be all about what buyers need to do and learning about loans and what's available out there. Now, I have a couple of interviews out on YouTube that you can still look up with a couple of different lenders, and there's going to be more lenders in the future, so you can understand more about what's going on in real estate and how to make that happen. Let's see. I'm going to give you my information there. So if you are looking to sell or buy a home, you can reach out to me at 408-439-0766. You can email me at coachmanonrealestate@gmail.com. That's Coachman, ONRE @gmail. We'll leave that down there. And I also like to talk about one of the things that we are using is StreamYard. That is a platform that we're using to broadcast. So if you'd like to make a comment, go ahead and go to StreamYard.com/Facebook and give them permission to use your likeness, so that we can get your comment in there and we can see who you are. And then I always like to talk about the Grow Live Academy. If you have any interest in doing your own show, Grow Live Academy, that's Ken Wall's program. Ken has created an excellent program to allow people to do this live stream. And then StreamYard.com. And then one of the ways that I'm staying in touch with clients is through Hippo Video. So Grow Live Academy, StreamYard.com, and Hippo Video. 3 places where you can get great information. I'll get back up here, put that information in. So one of the things that we're going to talk about is lenders. And you get a choice in the type of lender that you want to use. Do you want to go to your local neighborhood bank, whether it's Bank of America, Wells Fargo, Bank of the West? There are many, many banks out there that you can choose from and decide if you'd like to get a mortgage through them. Or, of course, there's always mortgage brokers where they have more of a choice for you to find out exactly what you are looking for and to understand more of all the programs that are available for buyers and to help you get the best rates. You want to be able to do that. So we were talking about team, and one of the things that I have, the buying and selling of real estate, is a team business, and no team is complete without the coach. And we'd like to make sure that people understand that, because as you're going through the process of either buying or selling a home, you are the main person involved, but you also need somebody that's going to help you to get through each part of a transaction. And we like to call that the coach. So we'd like to make sure that you're able to help yourselves. Again, the buying and selling of real estate is a team business, and no team is complete without the coach. Make sure that you remember that. And we are there always, and you are going to have my information. If you want to reach out, we would be glad to talk with you. And of course, you can watch this on Facebook, on my real estate page, or you can go to YouTube and just look up Charles Coachman, and we can sure use some followers there. We're just starting to broadcast on YouTube, and we would love to attract some followers there. So one of the things that we have to do with the lenders, again, like I said, you have to know what type of lender you want to work with. If you are so comfortable with your local banker, whoever you are banking with, they should have home loans available. So talk with them. But then we also have mortgage brokers that will, again, give you a wide variety of loans that are available. And we have a bunch of them. And there are a bunch of different programs that are available. But one of the things that I like to talk about with lenders is that you need to have all your financial information in place. Understanding that that means you want your checking accounts available so that you can pass those on to the lenders. You want to have your taxes available so they can be passed on to lenders. They're going to ask for something called a W-9 to be filled out so you can get them, and they can get the information directly from the IRS to see what you filed. Because there's no longer that chance to get yourself into what we called, not nicely, a liar's loan. And a liar's loan was one of those that got people into a lot of trouble back in 2008 to 2011 when we had the mortgage crash. We had the real estate crash and the financial crash. because we had a lot of people in what we call liar's loans, where they didn't actually turn in work stubs, didn't turn in paychecks, didn't have to show what they were actually making, and were able to qualify for loans that they should have never qualified for. And a lot of them ended up in trouble. That is one of the things that I always want to avoid. Now, I became very, very good at helping people get out of those loans and walk away from their homes, even though they didn't want to. But they just couldn't afford the loans that they had actually gotten themselves into. And we want to avoid that for everyone in the future. Now, some of the loans they've eased up on some of the processes, so you still got to take a look at those. So, like I was mentioning, you need to get all of your information ready. And one of the things that I like to let people know is that you have to have all your information available for them. There's different ways of doing loans, and there's different things when you are ready. Hey, I have decided I want to go out and buy a home. When you've made that decision, the first thing that I advise you to do before you start looking at homes is to go out, talk with your lender, and find out exactly what you can afford. What you can afford is very, very important. No two ways about it. This is one of the things that causes a lot of headaches and heartaches. When you've got your heart set on a $1.5 million home, and the reality is that you can only afford an $850,000 home, there's quite a bit of difference. So we want to make sure that before you go out and look at a home, you have got your homework done, and that is meeting with lenders to find out what you really qualify for. We want to save you from those headaches and those heartaches. So we want you getting everything ready, meet with your lender, and then get your approval, your pre-approval to go out and look at homes. And that means the lender's already collected a bunch of information for you. And then they give you a document that says you were approved or pre-approved for this amount. Now, going a step deeper, we can do desktop underwriting or a DU. And that means they're getting all of your information and getting you ready and set up to purchase a home. And then when you have a DU, that's almost like working with cash. And that's very, very important when you come up and you're looking at a home with a person with actual cash. You have to be competitive. And that's what we want people to know. That's what we want people to know. You have to be competitive. Especially in this time where we have low inventory, which throughout the country they do. I'm located here in the Bay Area, in the Silicon Valley, in San Jose. And our market has been very, very competitive for years, but especially now since the pandemic has started. We had one bad month back in March of 2020. Remember what happened when they did the full lockdown on everyone. But from that point on, from April forward, it has been booming. Businesses have been crazy. Talking about real estate side. There are still people wanting to purchase homes. As a matter of fact, I believe that we've got pent-up demand for people that want to purchase homes, and we have very, very little inventory to deal with. So this is for sellers too. Sellers, if you are interested in putting your home on the market, let's really think about it. For the most part in the South Bay, 30 days with a single family home and your home is going to be sold. 30 days it will be sold if it's priced reasonably and if it's in good shape. We want to make sure that we're doing everything that we can. Now let's get back to loans. One of the things that I will always advise buyers to do is that once you've got your pre-approval, once you are ready to start looking at homes, shut down your checkbook. Don't go out and buy items that you wouldn't normally buy, your staples. Make your regular payments, but don't be making any big purchases. There's this story that I heard when I started real estate a number of years back. Folks had got ready to close a deal. And so with their new home, they decided they were going to get new autos to go along with it. So they went out and purchased 2 autos, an auto for the man and for the woman. When it came for everything to be finalized and get their final loan approval, they had made those big purchases and they could no longer qualify for their loan. No home, 2 cars, and a mess. So we are telling people, we always advise people, hey, once you've got this process started, don't make any big purchases. Wait until you've closed your transaction. Wait until your home purchase has been finalized so that you stay in good shape, so that your credit stays in good shape. Because that will certainly affect everything that you do going forward. We want to make sure that you're able to make that purchase. And we don't want any surprises in the end. So that's one of the things that we need to do. Make sure that you've done that. So now if while you're going through that process, you need to be 100% honest with your lender, whoever that is, whether it's a bank or whether it's a mortgage broker. You want to make sure that you disclose everything to them about your financial history if it's going to affect the purchase of a property, because we don't want any surprises to pop up when they do a further search as they get ready to close. So just like sellers, we're going to say disclose, 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 so that everyone's aware. We want to make sure that you do that. If you are going to be getting some help from parents or grandparents with your down payment, you need to get that set up ahead of time. Make sure that they write you a letter stating we have gifted our son or our daughter or our grandson or granddaughter this amount of money so they can purchase a home. And you want to have that. That is for the purpose of seasoning. If you need a gift, you also need to have that gift seasoned. Now, there may be some lenders or some mortgage brokers that can get loans that don't need seasoning if you're going to be borrowing some funds or if they're going to be getting gifts. But if you are going to be doing that and you've had a parent or grandparent offer to give you a hand, you want to make sure that everything is documented. Because they don't want to go through, a lender does not want to go through your paperwork and be checking out your banking account and then find out, where did this $30,000 come from? Where did this $50,000 come from? Where did this $100,000 deposit come from? they need that information ahead of time so they can start working on that and making sure that they've got everything done properly so that you can qualify and close when you said you were going to. We want to make sure that you were doing that. Now, I want to get on to talking about some of the loans that are available. You've got a conventional loan. A conventional loan is where you're putting 20% down. And in our area, conventional loans now can go up to $822,000, $822,375. Now, your lender will tell you exactly what you're going to qualify for. But if you're going to get a conventional loan, the loan amounts vary throughout the U.S. So depending on where you're at, and if you are in one of those high dollar areas, they can get up to $822,375. Now, of course, you can go over that amount if you would like to go to a jumbo loan. And so everything that's you need to qualify for there will be a bit different than a conventional loan. And we want people to understand that. A couple of other loans that we want to talk about are the FHA and the VA loans. We want to make sure, if you are a vet, we want to make sure that you can take advantage. Take advantage of a loan that you've earned because you have served your country. And this is one of the promises that we have made to our veterans. Now, rates have changed on those, and the loan amounts have changed on those. As a matter of fact, there may not be, as long as you qualify to get a loan at a certain amount, there may not be any other restrictions on you. But there is some work that needs to be done, and using a VH or a VA and an FHA, they do have some policies and restrictions that you need to be able to work with the home seller so that you can purchase the home. And those are things that we have to be aware of. So that's where coming in and having inspections done and making sure the house meets the criteria that both VA and FHA have met, where they've said this is the standard that we want our people taken care of. Now, with the conventional loan and other loans, you may not have to meet the same requirements, and we want you to be aware of that. And we're going to talk more about FHA and VA. And then there's also, like we said, the jumbo loans. Jumbo loans, again, are anything over the standard loan. The standard conventional loan is $548,250, all the way up to $822,375, depending on the area, state, or even zip code or county that you live in. So we have to take a look at that. And then there's another one called the ARM, or the adjustable rate mortgage. Now, when I first bought our home 40 years ago, just about 40 years ago, when we first bought our first home, we got an ARM. Today's rates are about 2.5 to 2.75. When we got our ARM loan, it was 11.8375. So almost 12%. Almost 12%, almost 10% higher than what loans are going for now. But they had been up as high as 20%, or very close to 20%. So there was a lot of different things that we needed to jump through. a lot of hoops that were difficult for us to go ahead and meet, but we were able to do them. Today, with the housing prices as they are, as high as they are, we have rates, interest rates that are at all-time lows, and we have to keep an eye on that. Nobody knows how long those rates are going to stay where they're at, so we need to keep a vigilant eye on that. But adjustable rate mortgages are another path to home ownership, because what we want to do is we want to make sure that the most people, the maximum amount of people, are able to qualify for home loans and able to become homeowners. Now, it's not necessarily true that everybody needs a home, or shouldn't say that. Not everybody needs to own their home, because maybe owning the home just isn't the right thing for you to do. Maybe renting is the best thing for you because you have a job that you're going to be moving. You have different ways of working, whether you're telecommuting part of the time and you have to travel some of the other time. You have to take a look at that. So we want to make sure that you're in the best position possible when you are looking to buy a home. We want to make sure of that. So conventional home loans, 20% down is the standard, but you can also get conventional home loans that are 10/10s. That means you're going to put 10% down. You're going to get a second mortgage for 10%, and you're going to have a full mortgage of 80%. So they call that, normally they call it the 80-10-10. And there's loans, and they may be available right now that you'll have to look through a broker, and it may be 80-15-5, where you're going to get a first loan of 80, a second loan of 15%, and then go down with 5%. Now, some of those might have a bit of mortgage insurance. And that's something that we will talk about that's related to an FHA loan. But whatever type of loan you want to get, there's certain ways of doing it. We want to make it as easy as possible for a person to qualify for a loan, as long as they are financially sound. If a person is not financially sound, we don't want to lend. That's a huge risk. Nobody wants to take on that risk, and we have to watch it. We have to be careful with that, because it will hurt the mortgage company and it will hurt you. We want to protect both entities. We want to protect you, and we want to protect the lending company, because the last thing that we want to do is have a foreclosure on your record. Now we want to take a look at FHAs. Now, FHA has expanded on what you can do with them. FHA, one of the big things about FHA is you only have to come in with a 3.5% down payment. 3.5% versus 20%. That's huge. That's huge. But you also pay for that. So I want to make sure that we cover that and talk about that a little more in depth. So you want to make sure that you understand exactly what's happening. And I just wanted to go over some of the things that we are finding. An FHA loan requires a minimum of 3.5% down payment for credit scores of 580 and higher. So you can have dinged credit, but if you have a good, stable job and you are making enough money so that you can qualify for a loan, you can get that loan. But you have to pay mortgage insurance premium. We want to make sure that you understand that you will have to pay a mortgage insurance premium. And that can be a game changer. Maybe that MI, or MIP is too much for you to handle and you're not comfortable with it. So you have to take a look at that. So your mortgage insurance premium, you have to take a look and see what that does, or possibly move into a conventional with the 15.5 loan and get away from that mortgage insurance. But you have to take a good look at FHA. It's a excuse me, it's a great program for those that can afford to do that. Again, one of the things that they're saying, that FHA lending amount for high cost areas is going to go up to $822,375 for this year. And that is for some of the high cost areas and for states away from the mainland, Hawaii, Alaska, or they call us the lower 48. We want to make sure that you're understanding that. And then VA loans. One of the things about VA loans is you do not have to come up with a down payment. Now, I like to make sure, even with my VA loans, for us to be a little bit stronger, to come in with some type of down payment. But one of the things about VA loans is you don't have to have a down payment, and there is no mortgage insurance. What a benefit. It's a great benefit. And we want to make sure that you're able to do that. If you qualify for a VA loan, let's work our tails off to find you a home, because there are a lot of people that love our veterans and they will sell to a veteran a little bit cheaper than they would to a normal client. So we have to take a look, and I've helped people with VA loans in the past to go out and find somebody that's willing to accept the VA loan. A lot of people don't want to because it's going to cost them money. Because you do have to, like the FHA, you do have to make sure Section 1 work is done. And that's work that the house says these repairs need to be done because you've either had termites or weather damage or whatever it is. But whatever the case is, the homeowners have to take that into consideration if they're going to work with the VA. So we got to make sure that that's done. And we have to find out what's the criteria. Can a buyer help in paying for that? We've got to make sure that we understand, because the criteria changes. And we want to make sure that you understand exactly what you're working with. Now, jumbo loans, again, any loans going over the conventional loan amounts, we want to make sure, depending on the area that you're in, and those rates are anything over 548, 250 to 822, 375. If it's above those amounts, then you have to move into a jumbo loan. And then, of course, the rates change on those. And you have to find out exactly where you're at. Can you bring in more money to get you back to a conventional loan? Got to understand that. Have to understand that. And then, like I was saying about the adjustable rate mortgages, that may be the difference in you being able to get a home. If you need that, our rates are low right now. If you can get an adjustable rate mortgage, it may be one of those things that helps you to get into a home. And that's what this is all about, helping you in the best and most easy way to get you into a loan that has the least cost, least effect on the pocketbook, least effect on your wallet. We want to make sure that we're able to do that. And that is where working with a lender, a very knowledgeable lender, on what's available and what your situation requires. So again, if you are looking for help buying in the Bay Area, anywhere in Northern California, and we can help people throughout the country. If you are looking for somebody throughout the nation, give me a call and I can refer you. Our network is huge and we can help you find. And we're actually in many different countries around the world. So again, this is Charles Coachman. This is Coachman on Real Estate. And thank you for being here. Look forward to seeing you tomorrow as we finish up our week on Coachman on Real Estate. Have a great day. Bye.